And a very good afternoon. I am Ian Grant, and this is The Mortgage Show here on Newstalk 1010. And today, the team from Cannect, the best mortgage now and forever. Check out cannect.ca, CANNECT.ca. Today, I'm joined by a real pioneer in the mortgage industry since the early stages of his career. Founder, CEO of Cannect, Marcus Severus is here. Marcus, nearly 20 years, 2 decades of experience in the mortgage industry, with additional experience in development and investment. Also joined by Matthew Scanlon, customer service rep with Cannect, who specializes in finding low-cost solutions to get clients out of debt and back on track with their credit report. Gentlemen, good afternoon. Welcome in.
Good afternoon.
Hey, good afternoon. You know, we're gonna have to change my bio because I'm also a fabulous swimmer.
Fabulous swimmer.
Like I have like take some notes. We're gonna have to make it a little spicier, right?
Well, you know, I'm sure that when it comes to getting the best deal on my mortgage, fabulous swimmer, right up there.
Also,
you know,
very good at going out for dinner. Like I can pick a great wine. You know, I'm very good at pinpointing really nice things on the menu.
Matthew, is there anything you'd like to correct on your bio before we actually get into the show?
No, I think we're good. I'm not an expert at any of the things that Marcus is there. So,
well, so there you go. You compliment each other like a good wine. Guys, somewhere out on the internet, and I told you I wanted to ask you about this because I thought it was a really nice compliment. These guys are the kings of reverse mortgages. And the one thing about the internet, and we've talked about this before, is, man, if people don't like you, you know it. And it usually does take a lot more for people to come out with positive things to say. And yet when you check out Cannect and you check out your Google ratings, I mean, it's just positive, positive, positive. And I thought that was an interesting one, the king of reverse mortgages. Just for anyone that isn't aware, what is a reverse mortgage?
Okay, so first of all, I'm not a king of reverse mortgages, but I will say that maybe, you know,
we'll take that off the bio as well.
Yeah, like honestly, Ian, we got to find our groove here, right? No, I'm just kidding. So we do a ton of them at Cannect, and we do them though in certain situations. We do them because we do a lot of mortgages. A reverse mortgage is typically something that I would say someone older than 70 should start to consider. And
is a reverse mortgage the same as a HELOC, or are they different animals?
Different. HELOC is what you want. A HELOC is like exactly what you want as a consumer, but it requires certain qualifying criteria. And when you get older, your income falls off. And in some cases, you know, you don't have any income. And as a result, it can be difficult to qualify for a HELOC. Home equity lines of credit, like HELOCs, are typically priced at prime or maybe prime plus a half, depending on who your lender is. If it's prime plus 1 and someone called you and told you your HELOC was prime plus 1, hang up the phone and call us right away. But if you're considering a reverse mortgage, it's typically because there's either a serious income deficiency to qualify for a loan, or there is a lack of assets. So any ancillary assets that person, that family might have. And then finally, there might be a real credit problem. So a reverse mortgage doesn't take into account anything other than the equity in the home. And there's a rough guideline for how much you can borrow based on how old you are. So if you're 70 years old, you can borrow about 40% of the value of your home. And it goes up to a maximum of 55% of the value of your home when you hit the age of 85, and then it caps out there. If you're younger, if you're 60 years old, you're typically only going to be able to access about 1/3 of your home's equity. So there are some limitations on it as far as how much you can borrow, but it's not stopping the momentum of these home equity loans. Like, there's 2 big players in the market right now, CHIP and the Equitable Bank. And they've reached, I think it's about a $400 billion, maybe $450 billion worth of reverse mortgages right now. And that's because of the demographics. Like 80% of almost 80% of Canadians are over 55. And they did I think probably one of these reverse mortgage guys did a poll, and half of those people said that their home's equity is an integral part of their retirement plan. And just in case you thought I don't listen to the show before me, I know you were talking about retirement.
Yeah, it's funny. I was just thinking about exactly that because, you know, I imagine there's a lot of people out there. Everyone's talking about how, you know, they have their, you know, the retirement plan is locked up in the house. But if they never realize that, if they never recognize that benefit to them, then, you know, I mean, I've gone down this route before and I've gotten real trouble for it, saying, you know what, this is your life. You put the money into this. You deserve to get something out of it. It can't all be about foraging every single cent you have so that when you pass on, it's left to someone else. And, you know, we started the last hour, actually, funnily enough, talking about how, you know, you can plan everything you want, but these unexpected things come up. Your roof may fall down, you know, the garage, and somebody drives into your garage. There's all these kinds of areas where, you know, all of a sudden you need a lot of cash, and all of a sudden you look and you don't have that cash, and yet you're sitting on a house that's, you know, a lot of it paid off.
So, I mean, listen, we can go in one of two directions, right? Like I could either discuss with you the merits of not saving and spending money and enjoying yourself before you die, which is not a bad conversation. But if we're going to focus on the mortgage stuff, I'll say that the critical piece to this is lining everything up so that if it does rain, you have an umbrella. So
it's a great point.
Making sure that your credit isn't damaged, right? Like some people kind of check out. They figure, you know, I don't have a mortgage. I don't need a mortgage. And then something happens and they realize that they might need to utilize the equity in their home. And that at that point, you need some time to prepare the proper application to get money. And like, as I mentioned, right, like a reverse mortgage might not be your best option. It just happens to be an option that doesn't require a lot of positive aspects to your personal covenant. It doesn't require income and credit. But because it doesn't require those things, the cost of it is more expensive. Just to give you a quick kind of comparison, on average, a reverse mortgage, if we were talking about a variable rate, would be prime plus 1.5 to prime plus 2. And a home equity line of credit, as we were saying, is prime. Or a variable rate mortgage is prime minus 1. Prime's at 245. So you're talking about a really significant difference. Could be, you know, 1.5 to 5%. And if you are on a fixed income or you are relying on the equity in your home, that erosion of the equity happens much faster. You guys were also talking about compound interest. It happens a lot faster when it's compounding at 5 points than 1.5 points. So what we try to do when we get these phone calls, right? Like when you say we're, you know, experts at reverse mortgages, I would say we're more experts at assessing someone's situation. We're experts at, like, we've seen a lot of situations where people come to us, and in almost all of those cases, it helps to put a little more work in. It helps to find a way to repair the credit. It helps to find a way to shore up the covenant to show that there is some form of stable income, whether it be pension income or rental income, or, you know, in order to help that borrower qualify for the lowest cost capital that they can. That's the name of the game here, right? The name of the game is lending money, and being in this space isn't super complicated. It's all predicated upon timelines and cost of capital. How long are you going to borrow the money for? And when someone says 1 year, assume it's going to be a little longer. And if someone says 10 years, assume it's always a little bit longer. So always establish that timeline, and then always try to find the lowest cost of capital. And if it takes 6 months to repair credit and build the covenant in order to get cheaper capital, we invest the time to do that.
Matthew, one of the lines you hear a lot is that the guy that only has a hammer, every problem out there is a nail. And that's one of the things that you guys can bring to this discussion, is that you're not just limited to one solution. You have a variety of solutions out there, many of which I'm going to guess that, you know, the first-time caller to speak with you has no clue, you know, they have available to them, because they only kind of know what they know.
You're right. In the way that I always look at a client's income and cost month to month. So like Marcus talks about some of these products being more expensive, but the truth is, when you're trying to budget month to month, having that extra $100, $200, I've been able to save one client $1,000 a month just by changing the way that their mortgage was structured.
Wow.
And, that money adds up over a year. And so it may sound like, oh, well, why would I take a product like this at $5.99? Well, the truth is, if it gives you $500 more a month in your pocket, the chances for you to live a better life, like, they just open up. There's no reason for people to be house poor when have equity in your home. It doesn't make sense to somebody like me when I look at the numbers, right?
Right. Or even just taking half of that and putting it into paying it down as well. I mean, talk about a win-win situation.
You mentioned timelines, right? So time goes by pretty quickly. The one thing you can do to amass capital quickly is use compounding to your advantage. And the way you do that is by reducing your total cost of debt. Once you start that momentum going, you realize how powerful it is. And the sooner you do it, the better off you're going to be.
And Matthew, if there's one thing that I did learn during the last segment, that is that, there really is a right type of person for the right type of loan, no matter what type of loan that is. And, honest to God, before I did this show, I would have assumed, we know how that works out, that, if I need money, I pick up the phone, I say, hey, give me money. And you guys say no, and I hang up and everything is good. But there are so many different options out there. And I'm going to go back to a familiar mantra of mine, which is that for the people listening out there, if they don't know that these options exist, they're not going to ask for these options. And unless, a company like you that are willing to take the time and go through and explain them all, there may be some great options that just don't seem like they're, that could possibly be on the horizon at 3:00 in the morning.
You're right. And that's exactly why we're doing the show, is to try to get the information out there to people, because we have so many lead generations that get us people's information so that we can get them on the phone. But really, it's about getting them on the phone so that we can assess their situation. And they may fill out a form for a home equity loan or for a second mortgage, for a refinance. But when we start to talk to them about what their situation is, the more and more information that we get from them, we're able to narrow down the solution that fits to them specifically. So somebody that may be, older in life, their pension is fixed, they have no other sources of income. They're looking at, they go to their bank. Their bank is not going to qualify for them for anything but unsecured debt. That's all they're going to give them is credit cards and lines of credit. And they're not going to give them because they have no income other than their pension. And that's where we come in, and we're able to build this file and look at other solutions on the market that maybe their bank won't offer them. And that's the thing. If you go into a TD or Scotiabank, they're only going to offer you their products. Scotiabank's not going to say, hey, TD's got a great line over here. And you're not going to go open account on the hope that they have this product for you. And they're going to tell you that they can solve your solution no matter what anyways, because they just want a new client. So once you're in the door with them, they just treat you like you're any other number. And we don't. That's the point. We try to look at you as an individual. We try to assess your situation. We try to see what your income is, what your debt situation is, what the equity in the home is, and then give you the options. It may not always be the reverse mortgage that fits for you. Maybe it's a private solution. Maybe it's a line of credit solution, but you don't know that until you get a hold of us and we start to ask you these questions about your situation. And then at that point, it's about getting really vulnerable with us, telling us seriously about what situation you are in. I recently had a client that didn't tell us about, $20,000 worth of debt, and we had to come up with a solution on the day of closing to try to figure that out. But we were able to do it. We were able to figure out a solution. Why? Because we've got great team members with me that we do this all the time.
I remember reading, and I was zipping away there trying to find it, and I can't. This was years ago, but it was basically an article that said that people in debt wait far too long, and it's almost every single one of them wait far too long. They cost themselves so much more, whether it's paying extra interest, whether it's just going down completely the wrong line of conversation as far as what they're receiving and what they should be receiving. And so, it wasn't just, hundreds of dollars. This was tens of thousands of dollars they were paying, as opposed to, just picking up the phone, taking some action and doing this. And yet you just nailed it there during that last paragraph when you said that when someone finds themselves that deep, they feel bad. They can often be embarrassed that they've managed to get themselves into this point. As we hammered home last week, after the last year and a half we've had, you don't need to. The fact that you're willing to stand up and get ready to move forward is a great sign.
Absolutely. I think that it's if you're listening to the show right now and you're scared to share your situation with us, use a fake name. Call us up right now. You don't need to give us your exact details, but let us know what your situation is. Don't be afraid to share it, because you're not the only person out there, and there are solutions for people. We have so many different solutions, and it's not about just if you did wait till the last minute. There's quick solutions for you. If you have a bunch of unsecured debt, you just move it over to the secured side on the equity of your home. The interest rate difference is going to save you so much over the next year. It's going to put money back in your pocket month to month. And that's the point, to get you a better life, to get you a better cost, to be able to get ahead in a situation, to be able to put food in the fridge and put your kids through school or whatever it is that you're doing. If you don't have that money to do it month to month, if there's not a plan, it's just a dream, right? You have to plan, and we have the plans.
416-872-1010. 416-872-1010 is the number to call if you want to send us a text message. 71010. Sorry to cut you off there. What?
No, I was going to say, I think a lot of the reason why people take their time with these types of decisions is there's a lot of information out there, and it's not all the right information. So they're looking for, let's say, the best rate on something, and they're speaking to just their bank, or the information that they're receiving can confuse them. So that the first step has to be to find a partner that they want to work with. I know that we're amazing at doing it. I know that there's also a lot of great mortgage brokers out there, a lot of people that can help provide this advice. All we want to see is we want to see the Canadian consumer get better educated and have someone unbiased working with them. Once we can accomplish that, we're going to see more and more Canadians feeling far more comfortable with their debt and the cost that they're spending to service it. Like, if you feel bad that it is expensive to service your debt, all you need to do is think about the Canadian government. The Canadian government spends $50 billion a year to service its debt. Since 2008, the debt of our country went from $1 trillion to $2 trillion. So the Canadian government is borrowing. The Canadian government isn't scared of it. You shouldn't be scared of it either.
That's amazing. Let's go over one more time, because we did hit it during the last segment. I want to, especially for somebody who's, their ears may have perked up and think, I wonder if this is for me. We were talking about reverse mortgages. Can you tell us who do you think is the right person? Who should be calling and asking about a reverse mortgage?
Listen, if you're in a position where you require to use the equity of your home in order to shore up your financial stability, your phone call shouldn't be, hey, I need a reverse mortgage. It should be, I need to find a way to supplement my living expenses using the equity in my home. I mean, we're going to find the solution that best fits you. It's not always a reverse mortgage. We're going to look for the lowest cost of capital solution. So if you are, 70 years old and you think that you saw commercials and, your friends told you and your banker said they couldn't help, you think a reverse mortgage is the only thing, trust me, we will make sure we explore all of your options. The goal here is to leave you in a very, very strong financial position. So if that is a reverse mortgage that accomplishes that, fantastic. But there's a lot of people out there that have significant amount of equity in their home. They have some additional investments. They can more than qualify for a line of credit, and utilizing capital from a line of credit at prime, 2.45%, and investing it. We've got some of our borrowers who invest it in our own mortgage fund. So investing it and creating a yield for yourself. All right, we've got a mortgage fund that's been returning 8% annually for the last 10 years. So think about that just as an example, right? $100,000 borrowed at 2.4%, and invested at 8% on an annual basis is going to yield, $5,500 every year. So there are a lot of solutions, right? It is not just a reverse mortgage for everybody. I mean, these reverse mortgage companies are smart. 80% of Canadians are over 55 years old. So there's a demographic shift going in one direction. But debt is debt. And the only blanket solution for solving debt is what's the lowest cost of capital and what is the time horizon. Using those two variables, adjusting those two variables, that's what helps you figure it out.
Before I go to the lines, guys, the one thing that I have learned over the past half hour is that there are many, many different options for people out there. And there are many, many people who have no idea those options exist.
Yeah. Listen, you hammer it home sometimes. Right? You make these comments. Connect's, we've built this, 20 years really, first of all, does not seem like a very long time. But we've built this on the relationships that we have with our customers. We've built this on a lifetime relationship, not on one transaction. So being flexible when we first meet is kind of like the price of admission, right? Like, we got great interest rates and we're a bunch of salaried employees that are constantly trained on what's available in the market. As a result, we're trained to put our best foot forward when we speak to you. And because of that, we build a great connection with our borrowers and we work with our borrowers forever, right? Like this, the idea of a business that can operate without a symbiotic relationship with its customers is done. It doesn't exist. You are your customers. We Connect. Not only do we thrive on seeing our customers do better, it actually directly impacts our bottom line, right? Like our customers come to us to solve a problem. How can I reduce the cost of my debt? While they're with us, they also find out that we can help offer them an investment tool that can return them more capital. We can build a relationship with you with the end goal of helping you achieve more financial freedom. Build your asset base. You win, we win. That's why I keep referencing this motivational alignment. If you speak to some of the people that we work with on a regular basis, you start to find it, you start to get the feel for what we're doing at Connect. And it really is entirely predicated upon strengthening our borrowers.
Matthew Scanlon, do you find, I guess you must, that people are surprised at just how much they can save. Almost every show I do on this radio station, the one truth that is just pushed forward by listeners is, these guys are taking care of me. This is great. I've been with these guys forever. They're taking care of me. They're looking after me. And then, a couple of callers that we've had to this show, you talk to them for 25 seconds and realize that, you're not getting what you deserve. You're not getting the best for you.
I totally agree. I'm pretty vocal about, my passion for trying to save people money on all my social media channels. And I had a friend of mine reach out to me a few weeks ago and was like, I'm in this situation right now where I bought a home with somebody about 2 years ago. They live in the basement. We live upstairs. She's got a child. But things haven't been working out and she wants to buy them out. And she came to me and was like, what are my options here? And so we openly discussed what's the cost, how much equity was in the house, how much the down payment did they put down and versus the other person. And we took all the numbers into account and we realized that it was going to probably cripple her financially in order to take this mortgage out to buy out this other person. So then we looked at it even further and we said, well, why don't we increase the loan even more? And we take that extra money and we invest it in our MIC. And then from there, the cost of the original mortgage goes down so much further. That extra money, historically, we've been, making 8% a year on the returns from the investment from people that come into it. So that 8%, if you're able to take out a mortgage at 2 to 3%, you're laughing on those returns. And that month to month dividends that gets paid out to you helps to lower that month to month cost that I've been talking about this entire show, right? The point is to lower that month to month cost so that you can have extra money in your pocket and you can make that equity work for you faster. You know, at the end of your term at 20 years, maybe you want to refinance it and stretch it back out to 30 so that month-to-month cost goes down. Sure, it's an extra 5 years, but you put money in your pocket. There's things that you're going to be able to do with that money in your pocket over that time. You're going to get much further ahead in life. You know, you let your equity work for you.
416-872-1010. Jacques is in Toronto. Thanks for calling. Jacques, what's your comment?
I got a question here. My parents, they've been working with somebody on getting a reverse mortgage. And I'm not exactly sure who they're working with, but I don't really know too much about it. But it seems quite expensive. And they have a pension and can kind of like pay for everything pretty much right now. So their affordability is there. So I'm just kind of like trying to figure out, because they seem to be like being pushed in this direction by their broker to get a reverse mortgage. So like in the event of them having like a pension that can kind of afford their day to day, like is a reverse mortgage where they should be going? Are there any other options that they should be considering? Just looking for your suggestions.
Sure. Yeah. I mean, this is a common situation that you're in. So the dirty side of mortgages. Brokers are heavily compensated to sell reverse mortgages too. So I'm not saying that that's what's happening in this case, but what you have to start to consider here is if there is income to service the debt, and if your parents have decent credit, there are a lot of banks clamoring for the opportunity to lend them money, and lend them money at, prime plus a half or prime on a home equity line, or less than that on a variable rate mortgage. What you have to realize is the person that you speak to needs to be unbiased in what they're offering you. And if they don't have a long-term focus on what they're offering, it's going to get sticky. I'll tell you, you need to help your parents out. I think you got to step in a little bit here and gather some, again, like we say, right? Gather more information. Having more information just expands the options that are going to be available to you. Things that you think might not even be relevant are probably pretty relevant. For example, right? Like you could go on title with your parents as part of a estate planning process and help them qualify for a lower interest rate mortgage in order to reduce their debt servicing costs. At the end of the day, these are your parents, right? Help them live more comfortably. It's probably all going to be yours afterwards anyways. So work together. I mean, you see this so much more in like European and Asian countries where the family unit is extended, and parents and kids and grandparents, they live together, they work together. They're all doing things to help and support this communal family. I think we need a little more of that in Canada sometimes.
That's such a great comment, because as he was speaking and I was thinking about it, I was thinking if the kids, or if whoever is responsible alongside the parents, weren't invited to this discussion, not for any legal reason, but just for a supportive, understanding, possibly explaining what's going on reason, then that part there kind of doesn't pass the smell test right there. And then you come in at the end there and say exactly what I'm thinking, which is bring the family, make sure that people are involved, people understand exactly what's going on. And that goes back to what you've been saying throughout the whole show, which is that, this isn't a one-time deal. You want these people coming back. These people are now going to be part of the Cannect family. Therefore, you're obviously going to do the best you can for them on the way in.
Ian, I'll tell you. So a lot of customers are like, well, wow, how come that wasn't offered to me at my bank? Like, why didn't my bank provide me with these alternatives? Your bank is not there to provide you with these alternatives. The people that work at your bank are there to provide you with what is profitable for your bank.
And that's their fiduciary responsibility.
Yeah,
that's what they do. That's what people don't understand.
Unfortunately, and like to drive that point home even more, there's a mortgage broker's course that you need to take. And there is continuing education that you need to maintain in order to be an accredited mortgage agent or mortgage broker. You got to get relicensed every single year. You got to take more courses. You have to know the business. This does not apply if you work at a bank. The National Housing Act states that if you work at a bank, you can sell mortgages all you want without any education as to what they're all about. So it stands to reason that these people that are working there, they're not bad people. They're just trained on one company's offerings. I like to use the example of Leon's. If you walk into Leon's to buy a couch, they're going to sell you a couch from Leon's.
That's right. Yeah. Yeah. And I mean, having done these shows for as long as I can, we can pick this up on the other side of the break if you want. I'm aware of just the compliance that you guys are under. I mean, I've had emails saying, it's not, you can't use initials. Make sure you explain it this way. There's a ton of rules out there that me as the host and you obviously in your industry have to go by. Interesting text question here, guys. And I guess it's from somebody who's just curious if it's the same with the banks. And that is, gentlemen, how does the mortgage approval process work at Cannect?
First of all, I really do appreciate that Red Hot Chili Peppers coming in.
There you go. Thank you, Tony.
The approval process is pretty easy. I mean, it can happen on the phone with one of the amazing people we have here. It can also happen online. We've built this incredible technology that if you go to Cannect's website and just enter in your address, you can glean so much information about your home's value, what is owed.
And I'll just interject here. Marcus isn't lying about us building our own technology here. We have just as many developers working for us as customer service, brokers, and underwriters. There's literally as many developers working on this stuff every day to make sure that we're up to date and being able to give people the right estimate every day.
Yeah, it's the future. We fully realize that the future is to be as efficient as possible in dealing with our customers. People don't want to waste time collecting paperwork and, having multiple phone calls. So in a lot of cases, we can gain all the knowledge we need by just getting someone's address and consent. And obviously we want to figure out timelines and the amount of capital that might be required for a certain purchase or refinance. But we typically have most of the tools that we need on our own through our technology to help our borrowers. And they're our partners, right? Like, I can't emphasize that enough, right? If you are coming to us, we treat that as the ultimate compliment, and it doesn't get wasted on us. And we're going to do our best to make your life easier, right from the beginning. So the moment
last week you pointed out that unlike other lenders, you guys don't deal with brokers, with other brokers, that is?
So, okay, we are a mortgage brokerage, and we have a mortgage fund. And our mortgage fund lends exclusively through our brokerage. It is designed, and the way that works allows us to be cheaper than our competitors. Most mortgage investment funds will operate through mortgage brokers. What we're trying to do, and the name says it, is connect the Canadian borrower to the Canadian lender. So by dealing directly with our investors, and obviously we do that through an exempt market dealer, and we ensure that our investors are accredited and eligible to invest with us, but we deal directly with our investors. So there is no middleman between us and the investor capital that we utilize to help our borrowers. We also deal directly to our borrowers. This has helped us create a really, really different ecosystem that means that there is nobody in between you and the money you may need to borrow. It also, and I can't emphasize this enough, and it's the most critical piece here. Whenever you deal with anybody, whether you are buying a lawnmower or a new car or getting a mortgage, motivational alignment. The people here at Cannect are completely aligned with the borrowers that call us and the investors that we deal with. We want the capital that we hold to be distributed in a risk-free manner to good quality borrowers who we can then help get to lower cost capital. That's it. I mean, it's hard to convey that in a 30-second commercial, but if you think about it, it really is the way finance should be, right? We get stronger when our borrowers get stronger. If we can reduce the cost of capital for the people that we deal with, we know that they're going to have more disposable income. We're going to hope that they invest that disposable income. We know how amazing what we've created as an investment tool is. And we also know that building a relationship with those borrowers when they were down and out helps us and helps them going forward, because that invested capital then becomes returning investment. It becomes something that can supplement income or stabilize them for retirement. You know, you look at the law of 72, right? Law of 72 says that if you divide the rate of return that you are receiving into the number 72, that is the number of years it takes for your money to double. And we aren't doing anything super quick here, right? If, historically over the last 10 years, we've returned about 8%. That means your money doubles in 9 years in Cannect. That is not a get rich quick scheme. That is a low and slow method to accumulating some wealth. And if you're sitting there right now thinking, well, that's not me, I've got so much debt and my credit sucks and I'm not working, guess what? It is you, because your property value has increased. Just because your bank said no, or they steered you towards unsecured credit, just because you were advised to take a reverse mortgage, just because you think you need a second mortgage or a home equity loan at a high interest rate, it does not mean that that's the case. The key to this entire debt financing piece is find someone who's motivationally aligned with you. And we put all our cards on the table. We're there with you. We do better when you do better.
Well, just going back to an example from earlier this show that really stuck with me, and that is, I come to you, I'm paying whatever I am right now to the other place. I come to you, you show me how I can save $750 a month. I take $500 out of that $750 that I'm saving. I get to put $250 in my pocket and use for whatever. I invest $500 back with you on this found money that you've discovered for me, and it's win-win-win-win.
Yeah, I mean, listen, as long as the borrower meets the criteria for the OSC, which can become, stringent at some times with some of these borrowers, yes, there's an amazing solution available. And think of us like a bank, right? Like, we handle debt and we handle investments. We just do it playing on your team. Instead of going in somewhere where, at a bank, their goal is to make sure you're borrowing money as expensive as possible and you're giving it to them as cheap as possible, we're the complete opposite. So whether you have a $5 million house with a $500,000 mortgage or a $500,000 house with $5 million worth of debt, we want your phone call. We want to help you through it. And we're amazing at it. Every single person here at Cannect is extremely well trained. I mean, on a weekly basis, we are doing seminars on every available product that is existing in the marketplace. Do you know there's 3 insurers of mortgages in Canada? Each insurer has different rules as to how they lend to the Canadian consumer. There are hundreds of lenders.
That's a great way to start next week's show, because I'm right up against the wall. How's that?
No problem.
So I'm going to come back to you we've got our first question for next week. We just have to get
Are we going to listen to the chili peppers on the way out?
Well, I don't know. That depends on Tony's agility on the board. Guys, as always, a great hour. Thank you so much.
Thank you, Ian.
Thanks, buddy.